So a very good evening here on the 6th of October 2017, and a very warm welcome to this Forex Friday video update. My name is Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference and the Traders Open Day. A very warm welcome to all of you and all of our regular listeners. I know there hasn't been a Forex Friday for several weeks now, and that's just due to a range of reasons actually, but one of the main ones is that really Master of the Markets has been working very hard to evolve itself into more of a trading business now than a training one was, taking a step back a little bit here from our training side of the business, and we're going more towards the actual trading, so the execution of trade strategies for which we're running here in the live trading rooms at the moment, as well as ongoing trading research to tie up and optimize the set of strategies that we are of course implementing. So that's all been happening here Master of the Markets. Combined with that, I've had some personal circumstances as well myself, something quite difficult emotionally. My father has passed on, and that happened actually just around a month ago, just less than a month ago in fact. So I took a little time off to be with family for that period, and of course for myself I wanted to take a little time out. Obviously trading the markets, we've got a great team here. They were able to look after everything while I went to manage that. So that's all been happening here at Master of the Markets. There's lots going on. We're very excited about evolving more towards a trading business. It's going to mean a lot more time actually dedicated towards the trade research and of actually the optimizing of our trading models, which is really exciting. Now in the next Forex Friday that I do, not this one but the next one, I'll actually show you the statistics of some of the research that we're doing on potential swing bars, or PSWBs for short, and we're actually researching these potential swing bars, what actually causes them to turn, when they turn, how long do they take to turn, how long until they confirm. Not only that, but how much do they travel when they do confirm. All of these questions have been answered in our research, and it's pretty interesting stuff. So I'll certainly publish that on a future Forex Friday, which I'll do. In the meantime, let's talk about our open positions as we normally do on Forex Friday. We like to go over the positions for the week so far. So the only position open at the moment is this dollar against Swiss franc. We entered this on the dynamic breakout, and let me just show you the actual position that we did take on just there. So what we did is we took the market long on the break of this swing high just here. That is a variation for dynamic breakout, and that's the variation that we trade in the live trading rooms. We also teach that variation on our 2-day Traders Basecamp, which is our initial course here at Master of the Markets, and that's a variation for breakout just there. You can see we are currently long on that, so we were triggered in by this spike just here, and we've been holding now for 4 days. We'll be looking to trail our stop at the end of today to this level just here, and that will of course minimize any potential downside for us just there. Shall we have a look at where our target is on that one? If I switch over to the trade journal, you'll see that our target is actually there at 9925. So 9925 is our target, and that's coming in a little further higher just here. Let's crunch that a little bit. 9925. There we go. So we are currently around 116 pips, 115 pips away from hitting that target. So we'll just keep monitoring this market, and of course we'll just carry on executing the plan. The key here is to minimize the risk. That's the only open position that we have at the moment. It is currently in profit. We are currently plus 40 pips or so on that dollar Swiss trade at the moment. So that's the only open position. I'm going to do a trade reconciliation with you for the whole month of September, because we haven't had a chance to do the Forex Friday for the aforementioned reasons. I'm going to be doing a complete trade reconciliation for the whole of September. So we'll go over all the elite trades for September, as well as all the live trade mentorship advanced trades as well. You may know here, for our regular listeners at least, that we have two teams here at Master of the Markets. We have our live trade mentorship advanced team, and then our Vedanta elite team. And of course the Vedanta elite team are the ones that trade the higher end strategies, more profitable. We hold the positions for larger moves. So that's the two teams here at Master Markets. I'll go over the results for both of them over the period of September. Just before we do that, I want to talk about our topic today. So our topic today is called open equity. It's probably a term that you wouldn't have heard of anywhere in the training industry. Again, it's probably because most trainers out there actually don't know, most traders that train don't actually know what open equity is, but it is a very, very critical tool to add to your trading arsenal. And what I want to do is I just want to teach you actually what open equity is and how we capitalize on it here at Master the Markets. So open equity is all related around swing highs and swing lows. Now, if you're not sure on what swing highs and swing lows are, Thiru actually did do a Forex Friday video on identifying swing highs and swing lows. And what I'll do is actually I will bring it up for you so you can actually see it, and what I'll do is we will drop a little link to that on the YouTube description below. So if you want to reference that, you can do, because to understand the topic that we're going to be discussing just here, you're going to need to understand what swing highs and lows. And so you'll see I've just brought it up just there. This is the video that I'm talking about just here. So if you watch Thiru's video on what is a swing and how to apply it, that was published at the end of July, we'll put a little link for you in the description just below. That will be the one that you can follow to get a better understanding of what I'm going to be talking about here today by way of open equity. So what is open equity? In a nutshell, it's the distance between when a swing high or low is confirmed up to the maximum point reached. So one more time, it is the distance from when a swing high or low has confirmed up to the maximum point reached. So how can we first of all gauge when a swing high or low is? So two things are required, so you'll agree with me. The first thing that's required is to understand when a swing high or low is confirmed. That's the first thing. The second thing to understand is what is the maximum point reached. So we can measure both of these things. There are actually three methods here that I've put onto this profile here on MetaTrader, which will help us to ascertain different ways in identifying swings. So the first one that we've got here is using the ATR10. Now if we look at this swing low just here, which we can see visually as a swing low now, we'll see very quickly that at the time that that bar formed, the ATR10 was actually 89 pips. Let's round that up to 90 pips and call that 90. Now, a method that Linda Bradford Rushke talks about by way of identifying swing highs and lows is by multiplying the ATR10 by 3. So if we take 90 pips and we multiply it by 3, her theory is that the distance from that particular bar plus 270 pips, which is actually on this buyer bar just here, and I'll highlight that with the mouse, that buyer bar just there, that is when your swing actually confirms. So it's moved 270 pips at that point. So if I just put my line on the close of that bar, which is just there, that's the point at which the swing has confirmed according to 3 times ATR10. Now, if I take that all the way up to the point of maximum point reached before the swing high is confirmed, let's see what the ATR10 is on this particular bar just here. The ATR10 there is 102 pips. Let's round down to 100 pips to make the math nice and simple. We can keep it 102. I mean, 102 times 3 is just 306. So 306 pips from the high of this is around about the end of this bar just here. So if we highlight this bar, that's when we realize that this is actually a swing high, and that's the highest point reached. Now if I look at the distance from here to this point, you will see that we have 890 pips of open equity on this ATR3 method. Now let's look at this example just here. Now what I'm showing you is I'm showing you a swing move here that's very clean. So we're expecting a larger open equity. And regardless of what instrument you'll use here, you'll get a large open equity. The real challenge to picking out a good indicator for swing highs and lows is when the open equity starts to shrink, and we'll look at some of those examples as well. So you can see we said already here we had 891 pips of open equity just there. So what we'll do, let's just put in a little note just there. We can put in a little text note just to say 891 of open equity. So we just remember there. Okay, now let's look at the next method. The next method uses what's called fractals, and fractals is actually one of the most popular methods for identifying swing highs and lows. When we run the 2-day traders basecamp workshops, for which we've run now 55 of these 2-day trading workshops, we've probably worked with well over 20,000 people in this space, and I can tell you that at least 75% of them don't have a clue how to identify swing highs and lows. First of all, they don't have any consistent method, or their method isn't quantifiable. One of the other 25%, some of them don't really have a method, but they have an idea. Probably 10 to 15% of people I speak to have an idea of how to quantify swing high and lows using this method called fractals. Now, fractals are methods of identifying highs and lows. You can see by these arrows here, it's identified where the highs and lows are. So you can see here, this is the point on a fractal. This particular bar just here is the method which you can see has got, we are looking at this swing high to this, the swing low being confirmed on this bar. Fractal confirms this by looking at 2 bars to the left and right. So here is the second bar to the right, and taking it up to the maximum point reached before you get 2 bars confirming in the opposite direction is this point just here. So here we have an open equity of 790 pips. So that's 100 pips less than Linda Radford Rushke's method. So let's just key in a little message here. So 790 and 790. For those of you that are swing traders, you're probably starting to realize why this is a very, very powerful tool to understand open equity, because for a swing trader, you're looking to capture swing in a market. The more open equity your indicator gives you for identifying highs and lows, the more of a chance you've got to capturing a larger percentage of that move. So this is giving us 790 pips of open equity. Now on the third screen here of the same currency, this is all euro yen over the same time period. On the third screen here, we've got euro yen using what's called the smart money indicator. Now this is a master of the market's proprietary algorithm which has been designed for master of the market's clients. This actually is not on sale on retail public level, so we don't actually sell this. If you go to our website, you won't find any mention of it. We do not sell the smart money indicator. This is only actually exclusive to customers which we're working with in either Live Trade Mentorship Advanced or Live Trade Mentorship, or have attended a 2-day trading workshop, because we don't want to have mass distribution, if you like, of this particular tool. This is one of the key things that gives us an edge in the market. So let's look at the open equity on that. This white dot indicates the bar on which the smart money indicator actually confirmed its swing low, and you can see here the swing high here is the maximum point reached. And if we look at the open equity from the close of that particular bar, which we've done on all the other 2 charts before this, to the maximum point reached, you'll actually see 920 pips 920 pips of open equity that time around. So this is on a move that's quite large and quite clean, and you can see there isn't much difference between the 3 ATR method and the fractal and this method. In fact, there is a bit of difference between the fractal because that cut it off very, very short. So 920 pips is the ideal, it's the best open equity. Now, it becomes more interesting when you get a compression in the market like this. Now here you can see in this period the fractals have next to no open equity. If you look at this, this is the point of confirmation, this is the maximum point reached. There was an 86 pip open equity just there. But if you look at the next move here between where this bar confirmed, this white dot, and highest point reached, this is another 630 pips of open equity, and the ATR10 method won't match that as well. It'll give you a very, very late entry. So even if we look at this next swing low just here, the ATR is 97.9. We'll round it up to 100. So 300 pips on, which is this bar, you'll actually get an entry into the trade at this level just here, and your maximum point reached is probably this one here. Again, you've got a 400 pip open equity compared to a 640 pip open equity compared to an 80 pip open equity over here. So you can see that the smart money indicator far outstrips anything that's available on the market by way of open equity. It gives us the most cleanest signals by way of swing highs and lows, and there are no redraws as well. So it's a very powerful tool which we all use here at Master the Markets to identify where these key levels are. So that's a little bit about open equity. I hope that that's added some value to your own trading, so you become more aware of how you can measure if you're getting effective swing moves or not. Let's do a quick trade reconcile. So we've got the Vedanta Elite traders. Let's bring open their trading journal. And you can see here, we'll start off by looking at the smart money trading strategy. So smart money trading strategy for the month of September. Got the trades just here from the 7th of September. We started with Euro Yen. 21st of September and 24th of September were the 3 trades. You can see we've got a 280 pip profit, a 33 pip loss, a 58 pip loss, giving us net 189 pips positive. So for smart money, we were up 189 pips in total just there. Let's go over to the money bars trading strategy on the Vedanta Elite journal as well, and we'll just bring that up. So here we are in September. Yep, these are all September trades for the money bars trading strategy here on the Vedanta Elite team, and you can see here at this point we are up a positive 32 pips is where the sum is. So we're plus 32 plus 189 at this time. Let's go back to the chart. So of course if we were to add 32 and 189, you get a 221 pip upside, or if we're looking at it in monetary terms at a standard £10 per pip, that would be a pound return of £2,210 just there for the month of September, and including the first week of October as well. So apologies for not doing a trade reconcile a little earlier. Obviously, as I said, we had some circumstances, but we are doing for the month of September just to make up for that now. Let's also do the live trade mentorship trade reconcile as well. Again, we'll look at it for the month of September as well. So we'll start off by looking at the dynamic breakout. Currently we are on the dynamic breakout on the dollar Swiss. Don't forget that. Where is the dollar Swiss currently? Let's just bring open our dollar Swiss chart. Dollar Swiss currently at 9798. So 9798 is where dollar Swiss is at the moment. And you can see that that's an open 29 pips of trade profit at the moment. We are minus 69 pips if you take the open position into account at this stage. If you don't, we're minus 98 pips on the dynamic breakout trading strategy for the month of September so far. And for the money bars trading strategy, we are also up a plus 32 pips as well. So if you take all of that into account, if you add the 32 and you take away 98 from that, we're minus 66 pips open close profit loss at the moment here in the live trade mentorship advanced room. Of course, if the dollar Swiss goes on to hit its profit target, of which there is a good chance at this time based on the way that the price is looking at the moment, and we're going to get to trail the stop on that to minimize the risk anyway. If it goes up to hit its profit target, that will be an additional 156 pips. Let's just cancel all there. So 156 plus the minus 98 and plus, so we'll have plus 58 pips if that does go on to reach its profit target. But of course that will be counted in the first week of October if it does that. Of course today, otherwise into next week. So that's where we are by way of a trade reconciliation. Slightly slower on the live trade mentorship advanced room. Of course we are up on the elite room a lot more heavily than that, and that's of course due to the smart money strategy, which is the most powerful strategy in the arsenal of the Vedanta Elite team at the moment. So that's pretty much it by way of my update here on Forex Friday for this week ahead. I hope you had a great trading week. Leave us a comment in the comments box below. In the meantime, feel free to check out our website at www.masterthemarkets.net, and do keep in touch. Until the next time, stay disciplined, follow your plan, and trade like a master. Bye for now.